In the metals quadrant, taking a look at the December gold futures contract, which bounces today after a one-session pullback. Gold resumed its rally, although it's somewhat of an uninspired move so far. The low today, 27.2870, was down 3 basis points, so we'll call it kind of an unchanged low versus yesterday's settlement of 27.2940. And the high today, 27.5630, was up 1.09%. With a little bit of time left in the session, we're still up a little bit more than 0.5% on the day. Initial volume today is light. Remember, it's not official yet, but that has to be expected given the slowdown in data and the slowdown in important earnings as we go into the big bulk of, say, the technology earnings and more important price data that we get next week. There's a China premium lately, and that China gold premium soared to record highs in 2023, but has fallen back to more normal levels lately due to a mix of strong demand and supply constraints caused by import restrictions in China. The premium collapsed as restrictions were lifted and demand slowed, with gold consumption falling significantly by mid-2024 from the Chinese consumer. The premium is now closer to historical norms. It's been influenced by economic factors like a weakening yuan and global gold market dynamics, but the future trajectory of gold prices in China remains tied to consumer adaptation and broader economic conditions that could be affected by the stimulus measures that were just announced if they actually trickle down to the consumer. We also had a yields drop today, which pushed the dollar lower. The dollar's lower for the first time in 4 sessions and only the second time in the last 12. So that's kind of a tailwind for all commodities, and gold falls into that basket as well.